Hey everybody, this is Ryan Mallory with a swing trading stock market bubble update. Is the stock market going to crash in 2021 like it did in 2020? Are we going to see that same similar correction that we saw in February and March of last year? The S&P 500, it was down 3 out of 5 days. So was the Nasdaq. The Russell Index, the Russell 2000, it was down 4 out of 5 days. The S&P 500 down 2.4%. The Nasdaq was the big leader to the downside at 4.9%, and the Russell came in at 3.1%. So it was quite a bearish week for the stocks as a whole. There wasn't a lot to go after. Even at the very end, the banks started to crumble as well, along with the airliners and energy sector. So nothing was really immune from this past week's sell-off. You got GameStop right back at it again. It was trading in like the sub 50s. Now it went all the way back up to 184, pulled back a little bit from there. But nonetheless, they're causing havoc once again for the hedge funds. Hedge funds, they're getting squeezed out of their short positions. As a result, they're having to raise capital in order to meet their margin requirements, which causes tech to sell off, your discretionary stocks to sell off, and a lot of your growth sector to sell off. That's why we're seeing a lot of selling this past week. But let's not be oblivious to the 10-year yield. You probably heard about it by now. You may even be Googling it as you're watching this video because you don't really know what the 10-year yield is. Well, let me tell you what this is going to do to the stock market. As the 10-year treasury yield continues to rise on the bonds, that means it costs a lot more for your tech stocks and growth sectors to be able to function. They got to pay higher interest rate. As a result of those borrowing costs going up, those tech stocks and growth sectors are going to pull back some. But are we seeing the 10-year rise because of inflation? If so, that's a big concern too for stocks, because if it is, the Federal Reserve has to start acting at some point a lot sooner than expected, because they will have to start tightening their monetary policy. If they start tightening their monetary policy, which they have made explicitly clear to the stock market, hey, we're not even thinking about raising interest rates until 2023. But if inflation kicks up, they won't have any choice. They can't remain dovish. They'll have to be much more hawkish with their Fed policy going forward. Or is it just a result of economic growth? That's possible. If so, it doesn't present as much of a risk to the Federal Reserve. In fact, that's really what they want. And before I get into the charts, I want to tell you about my YouTube membership channel down below. Click the join button and you're going to get access to all of my charts. You're going to get access to the S&P 500, Russell Index, and Nasdaq 100 updated multiple times each week. On top of that, you're also going to get access to my watch lists every time I update them, along with daily trade setups and the most intriguing charts of the day that I come across. Not to mention the fact that you'll get all the FANG stocks plus Microsoft and Tesla sent directly to you each week. So click the join button down below and get started today. Now, let's look at the SPY here. We've been talking about the 60-minute chart week after week after week here, and it's still very, very important, even more so now than ever before. Rising channel, I talked about how it had been testing the upper channel band and it wasn't likely to break through. Guess what? It did not break through. It tested it, and now we're seeing a pullback here. Where are we at now? We're at the bottom of this channel, and that creates a very precarious situation for stocks because it has to hold this rising channel. If it breaks, then your trend line off of the March lows comes in play here, and it is just below the rising channel. Now also note too, this red line, that red line is your 50-day moving average. That thing is still holding up very well and has held up the last 3 times it's tested. So come Monday, this will be back in play right at the open. Will we gap below it? Will we gap higher and start pushing forward again? We had a very similar sell-off in late January, pretty much the same thing that we just seen the last 2 weeks here. And when the new month came around, it rallied. So as we go into March, let's see if traders and investors alike are not emboldened to start buying this dip here and push it back to all-time highs. But if it doesn't, and we break this March trend line, then you're going to want to look at the lows off of the June trend line. This trend line is going to need to hold, but that also represents a major sell-off of more than 10%. So if we pull back to that level, you're talking about support around the 347 to 350 area, but with the 50-day moving average and with the bottom of the channel and the March trend line just underneath it, you're at a good spot for a potential, at the very least, a dead cat bounce, if not a pushback to all-time highs. So let's keep our eyes on that going forward into next week. How about the Nasdaq 100 QQQ? By far the most concerning chart, because guess what? The trend line off of the March lows, it's broken. The 50-day moving average, unlike SPY, it's broken. Tech is dragging. Now you have some price support going back to the September highs. Maybe it can hold this market up if we continue to see selling. Maybe that's where the selling stops at. But what concerns me is the huge amount of volume that we've seen over the last week. This week's volume has been huge. And outside of Friday, where the stock market did kind of rally, this S&P 500 surely didn't, but the Nasdaq did. Any buying attempt was met with very weak volume. So this is a huge concern going forward. But check out the weekly chart. Again, you can see the March lows, they've been broken. And if this is the beginning of a crash for the Nasdaq 100, and it very well could. This has been an epic market rally off of the March lows, and we were already in a bubble really before that ever even happened. But if that's the case, guys, this is like the tip of the iceberg here in terms of selling. So going into next week as well, if the selling continues, watch this 20-week moving average, because there have been some legitimate buying opportunities in the past, particularly 2020, off of this 20-week moving average. So if that can't hold up, that's going to be a huge red flag for us going forward. Take a look at the Apple weekly chart. This is what I'm talking about. It's already broken below its 20-week moving average, and guess what? In the past, that was a level of clear support for that stock. Now it's starting to break through it. We may be seeing the beginnings of a major market correction here. Now, how about the Russell 2000? I've been pretty bullish on the Russell 2000 for quite a while. It's been rallying incredibly well off of the November lows, but guess what? It broke that channel, and that's a huge concern. It was a very steep channel. The one thing that you probably want to hope for here is that it's not so much about a big sell-off coming in the Russell, but it's more of a flattening of the trend line, and that does happen over time. You can't sustain very steep trend lines. Instead, you will usually see these trend lines start to flatten out over time. We've seen that with the S&P 500. We saw it with the Nasdaq. What we have not seen that with yet is with the Russell 2000. It's also struggled to hold the 20-day moving average, but it has not been as clear-cut of a solid support level as it has been in the weekly charts of the S&P 500 and the Nasdaq. Instead, it's dipped below and it's rallied back up. We need to see on Monday whether it can show that same resolve and push back to all-time highs. It's not that far off. It had 3.1% downside for the week, but it still has kind of like a bull flag pattern here. It's a little sketchy, but it's still in place. Also concerning is the heavy volume that we've seen over the last 2 days in the Russell 2000, so keep an eye on that too. So while other indices, like the S&P 500, which is showing a potential test of the rising trend line off of the March lows, and while we're seeing the Nasdaq starting to break that trend line off of the March lows, there's the potential for a dramatic pullback if the Russell wants to do the same in the terms of just at least testing the rising trend line off of the March lows. It is so detached from reality and from that March trend line that a significant pullback could be in place for the Russell 2000. So you've got to keep that in mind. If we see follow through this upcoming week to the downside, I don't want nothing to do with the Russell 2000 because the potential downside risk is huge. Now, check out the VIX, the Volatility Index here. Back in February and March of last year, this thing went to incredible heights. It was over 85. What is it doing now? Every time we get a spike, it gets quickly sold off. We got a spike on Thursday of last week. We saw a little bit of a decrease in the VIX index on Friday. However, it needs to be able to sustain a rally more than just one day. When you go back to last year, it sustained it day after day after day. It kept rising to heights that nobody even thought was possible. Since then, it's a one-day pop and it just craps out. So we need to see whether or not it does the same. If we start seeing a heavy sell-off followed by a rally in the broader indices next week, okay, this thing's probably going to fall apart yet again, go down to 20 before it sees any potential pop higher. There's also a layer of resistance going back to last year. It is yet to break above that. I would not get serious about the VIX and its potential to really ramp up into the 50s or 60s unless we see a break of this declining trend line here. If you enjoyed this video, I'd encourage you to like and subscribe. That's what really helps me grow this channel. It's what helps me continue to provide you with these great videos each and every week. So make sure to hit like, make sure to subscribe, and you'll be notified when I do these videos about once a week. So tell me down in the comments below, what is your strategy going forward? Are you seeing this sell-off in the FANG stocks of late as a potential buying opportunity? Or is it something that you just want to stay away from? How much cash are you raising right now versus how much equity you're holding? Give me some percentages there. I'd love to know. Thank you guys. God bless.